Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, March 24th, 2023. And our top story today, prices continue to rise and food costs skyrocket. And joining me now to discuss this and a lot more, David Anderson is an economist at Texas A&M University. David, it's great to see you. Thanks so much for joining us on the program this morning.
Hey, thanks. Thanks for having me on.
Yeah, it's great to talk about. I don't know if it's great to talk about inflation, but it's always important to inform ourselves about inflation and the relationship to prices. David, let's talk. I want to get to the Fed in a couple minutes, but let's just start off with overall prices. How are we doing from a pricing perspective? Are prices still going up? Have they been tampered down by the recent actions of the Fed?
Well, I think if we looked at the data would suggest that this rate of inflation that we've had going on is slowing. So, whether that's because the reason we had inflation and it has jumped up and there's not that pressure to keep it jumping up, or, certainly actions of the Fed to try to tamp down inflation are probably having some effect also. But, I think one of the things that's important to remember and when we think about the stuff that the Fed does, inflation's not a good thing to have in your economy, and you really want to try to stop that. But there are big time lags in this. So the Fed takes action to raise rates, yet the effects of those aren't necessarily felt for some time. And so it's raising rates is sort of in some ways a fairly crude instrument to try to get accomplished what you're trying to accomplish. So we're still in this time lag period, I think, of seeing the effects of that take hold.
David, just as a follow-up, and you mentioned prices going up, or prices are going up, and there's a non-correlation in terms of the timing of the Fed. But what about food prices, and in particular egg prices? I just read somewhere egg prices are 70% more expensive than they were a year ago, and the dollar store has actually stopped selling eggs because I guess they no longer cost $1.
They can't do it for $1, can they?
No, they can't.
Yeah, I think that's true. And the data that came out that went into the consumer price index, really our measure of inflation, the kind of that headline number, eggs dropped 60 cents per dozen. They went from $4.82 to $4.21. Now, $4.21, that's a high price for eggs, I think, as we think about historically. It's probably the third highest on record in nominal terms after the last 2 months. But that's one of those items that's kind of moving in the right direction in terms of falling prices. The level is high, but it's coming down, and it's coming down because really, egg producers are responding to high prices, and really responding to the avian influenza that they're hoping has run its course and will end. And so we're seeing egg production increase. But we're also seeing people change their behavior. They're buying fewer eggs, which leads to lower prices. Both of those, in fact, lead to lower prices. And I expect that egg prices are going to continue to come down based on what we see in the wholesale market, where egg prices continue to fall.
And David, I know you're not a nutritionist, but people looking for alternative, if they go away from eggs, maybe they're eating soy, maybe they're eating some other protein. What about the impact, the economic impact on nutrition? I mean, these are short-term problems, and they hopefully will be corrected over time. But if people are making other choices and there's opportunity cost or opportunity loss, what does the impact have on nutrition and the nutritional impact on economics?
Yeah, one of the interesting trends, we see these trends in food where, as an economist, in terms of demand, we might call that tastes and preferences of all of us are changing. And one of the ways that has changed, I would say, over the last number of years is this desire to increase the amount of protein in our diets. And eggs is a great source of that. It can be a substitute for meat. It has long been an inexpensive substitute, right? So if you were really on a budget, if we're really constrained, eggs are a substitute there. And now we see eggs have gone up much faster than meat, in fact. And so relative prices would suggest a lot of our meat items are actually cheaper, relatively less expensive than eggs are. And so, I think it certainly takes its toll from a desire to get more protein in our diet. It does make one of those, kind of basic items that we buy much more expensive.
Yeah, I'm thinking about all those bodybuilders who are now, what are they going to go to now? There may be lentils. Maybe they're going to go, I don't know what the lentil market. Last question.
More whey protein, more whey protein shakes and that kind of stuff.
Yeah, I don't know if they're going to be as big for the next Mr. Olympia. Last question. Let's talk about the Fed action. Do you want to talk a little bit about that and the impact, how you see it? And I know markets, they knew something was coming, but maybe didn't react as positively. And also, the impact of Silicon Valley Bank, Signature Bank, some of the bank crediting issues. You want to talk a little bit about that?
Sure. So, in this atmosphere that we have of rising rates, I think we find that we find a bunch of people, these banks, really getting caught on the wrong end of this, right? Where they had a lot of money in bonds or T-bills or whatever that were relatively low rates. And so as interest rates go up, those bond values go down. And so on paper, they got a bunch of losses if we look at the books, which really, it doesn't matter unless somebody can force your hand, right? And create a run on the bank, which is what happened with Silicon Valley Bank. I always think of, It's a Wonderful Life. You see a bank run, that's what this is. This is a bank run that was created by some folks who took all their money out and demanded all their money, and they didn't have the liquid reserves to do it. And the more you try to sell those bonds that they had holding, those assets that are declining in value, you're in a real bind. And so, we've got a bunch of banks like that are facing that same vulnerability.
Yeah. Look, things worked out really well for George Bailey. I mean, I think his daughter said every time the bell rings, an angel gets its wings. And I know my dad absolutely loves that show. David, I need to take a very quick break. When we come back, we're going to talk about the headwinds that many farmers face. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.
Well, David, thanks so much for staying with us this morning. Really appreciate you hanging around for segment number 2.
Thanks.
Yeah, this is a fun conversation. Let's pivot a little bit. We talked about food and prices, and there's a lot that goes into manufacturing food or creating food. And our farmers, we rely heavily on our farmers here in the United States, small and large. What kind of headwinds are they facing today as they look to create more food, more produce for the American people and also people around the world?
Well, if we looked at some of our, really our farmers, they're producing all the food that we consume, farmers and ranchers. And if we think of on the meat side, we feed livestock, corn, soybean meal, a host of other products like canola meal, cottonseed meal, a host of these crops that we grow are going to livestock feed. And if we looked in the corn market, we would have to go back 3 or 4 years to about in 2019 when we really saw corn prices increase dramatically. And that really kicked off with a drought in South America that cut, corn and soybean supplies. We're a big exporter already. We had supplies, but we operate in a world market and those prices increased dramatically. So we had much higher prices for farmers, but also much higher costs for livestock and meat producers. And so, we had it this same time period, and these aren't really necessarily inflation driven. These are drought driven and things like that. World demand for meats that are growing, which means we demand more feed for livestock. So we have escalating fertilizer prices. Obviously, we've all seen prices at the gas pump, and while they've come down, they're much higher. And all of those feed into higher costs of production for farmers and ranchers, which eventually gets passed on into higher prices for all of us.
Absolutely. We're feeling it. David, what's the impact of the war in Ukraine and between Russia and Ukraine? And look, this is a conflict that's been going on since February or March of last year. So we're at the 1 year, 12-month toll. But you look at that conflict and you look at the pandemic. How does this all kind of add up to what farmers are experiencing today?
Yeah, so I think this the Russian invasion of Ukraine, in terms of agricultural markets, is a pretty important factor in terms of taking prices that were already high for stuff like corn and making them jump up a little higher. Because both Ukraine and Russia are major exporters of corn and wheat, sunflower oil. The sunflower oil from Ukraine, they're the biggest producer in the world. And so, it ratchets up those prices higher, which makes our livestock feed more expensive. It makes, all of these production costs more expensive. And so that's part of it. The pandemic, in a way, has led us to, I would argue, a lot more volatility in our markets, that in some cases we're still dealing with the rippling effects of that. All of a sudden we have, folks stay home, they don't go to restaurants. So they go to the grocery store and they buy stuff and they cook more at home. And then, then as things open up, as we get past that, we got people shifting back their behavior. And so it really causes these rippling effects, I think, in the marketplace. I think one of the sources of, in terms of inflation, is the idea that, so many of us were staying at home and working from home. We were still getting paid, but we saved a lot of money. And once we come out of the pandemic, we're out spending that money, which adds that pressure to higher prices because we're taking those savings and we're spending them. And which also, part of inflation is that, but then that leads to higher prices. So we burn those savings faster buying stuff that costs more. So, really all of these things are interrelated. And what makes it so complex is many of these happen at sort of the same time period, right? And one follows, that's affected by an earlier event, the next event follows on that. And if I could say one more thing about that, I would roll into all of this, is we have a lot of the U.S. that's actually in a pretty major drought and has been for a long time. You've seen the big rainstorms and snow in California, which may alleviate some of this long-term drought, at least for a short while. But the western half of the U.S. and now much of the Great Plains continue to be in drought. And drought's a fundamental factor in food production.
Well, David, I want to ask you about, you mentioned corn, and I want to ask you about energy and the conversion of maybe some of the corn to use ethanol. That probably has a major impact on our food, our agricultural prices as well.
Well, it certainly does. If we went back to the energy bill that passed in 2005, kicked in 2006, which mandated ethanol use in a rising amount in gasoline. Remember, the idea back then was this is a renewable fuel that we produce ourselves. It's made here. It replaced MTBE in gasoline. It's an oxygenate. It burns cleaner. So we use ethanol. In fact, ethanol, which is really just grain alcohol, right? And it's the largest user of corn in the U.S., followed very closely by livestock feed. So, what happens in fuel markets certainly affects corn prices as well. And that's been a huge boost in demand over time for corn farmers. I mean, that's something that has been a dramatic increase in corn prices, really helping farmers, a whole new demand area. It helped corn farmers, but it also meant livestock feed was more expensive. So there's winners and losers in that. But certainly what happens in fuel markets affects that demand for ethanol and affects corn prices.
David, last question. Let's talk about the small farmer. How's the smaller farmer doing? There are huge agro businesses now, but that smaller farmer, America was built on smaller farms. How are they doing? Are they having difficulty with these higher prices? Clearly, they have to pass along some of those higher costs to customers, but how are they doing overall? And we still need them.
Yeah, I would argue we do. And I think you're right. Our country was built on, this agrarian system, this farmers and their productivity allowed so many people to go to cities, which built our whole economy, manufacturing and all the things we see as we look historically at the United States. I would say we got a lot of small farmers struggling with costs. And really, one of the things in agriculture is historically, and I think it's still true today, the inability to pass on higher costs. They really remain, for most intents and purposes, price takers because we have so many and we have so much production. And so we really don't have that ability to pass on those higher costs. The way higher costs occur is, when higher costs occur, some people are less profitable, some folks go out of business, and that leads to a cut in production. That's kind of the market signal. And that cut in production leads to higher prices for buyers and ultimately us consumers. So certainly I would argue small farmers have struggled under the effects of these high costs dramatically. And there are economies of size in agriculture where larger farms have lower costs, just like we see in other industries. There are economies of size.
Yeah, well, I think there's going to be a lot of change. We're going to have to see what the Fed actions, what they actually do, and we'll have to see the impact on not only farming, but manufacturing and some of the other sectors in our economy. David, always great to chat with you. Thanks so much for joining us, and we look forward to having you back on the program again very soon.
Hey, thanks for having me on. I enjoyed it.
And that wraps up this episode of BRN AM. Have a topic of interest, somebody you think we should talk to? Drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, we'll visit our website and, of course, all of our streaming partners. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
But if you're tired of the same old...
Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.